Elmos to our north and Richmond to our northeast. And this is some of the other projects that are over in Western Australia. Now, there's a distinction between those two areas. One is magnetite in Western Australia, and that's a hard rock material. And where we are in Queensland, where you can see that green area, that used to be an inland sea, and we're from a sedimentary deposit. So there's a distinction there. And we've just come into the Geological Society down in Canberra, Australian Geoservices, and we've found out that we are now #2 in the world for global resource of vanadium, and 31% of it is in Australia. And interestingly, we haven't developed any of these projects yet, but there's a number of them underway, including us. So we have a large resource. This is a massive resource. This is 2.5 billion tonnes of vanadium at 0.3%. And along with that comes about 700 million barrels of oil in situ. And it's in the oil shale. You can see that core sample that's on the screen there. It's a black material. It's only about 60 meters deep. And we take that material out, we extract the oil, and then that allows us to liberate the vanadium. I'll explain a bit more of that in a moment. So location-wise, we are right on the road and rail of the heavy rail from Townsville to Mount Isa, as well as the highway, the Flinders Highway, and only about 6 kilometres out to the edge of our tenement to the town of Julia Creek that you can see just up here. Has its own airport. And this main pit that you can see here, that's 30 years of mining in that first pit shell. But if you extend this out to the boundaries of where we are in this inferred resource, that's about 100 years of mining. So this is a long, multi-generational project. Now, what is critical? What is vanadium? Well, it's a critical mineral. It's on the list, and very significantly, because it's been primarily used in steel strengthening. And it's still quite the largest part of the market. So anything that needs high tensile steels, tooling, rail, shipping, needs a lot of vanadium in that metal. And that's been where most of the vanadium has gone globally. It also adds significantly to the strength of steel. In fact, Henry Ford was the first to use it in the Model Ts. In fact, he had the only vanadium mine in the world in Peru from about 1901 to 1952. Now, anything that goes supersonic speed needs quite a good deal of vanadium in there, and about 20% plus in the alloys. And that's why Mr. Musk, with his Falcon Heavy rocket there, can go a lot further with a lot more payload, because the width of the steel that's used in those rockets is actually 1/7 of what it was to send the man to the moon. And that's because of the amount of vanadium that's in that material. It's also in catalysts, it's in for sulfuric acid, it's in oil production, it's in smart glass, it's the tinting on your glasses. So these are all well-established industries, and that's where most of the vanadium has gone. But the real interesting part of where we see vanadium going in the future is in vanadium redox flow batteries. Now, these are large liquid batteries suitable for the grid, fantastic in Australian conditions, sub-zero temperatures up to 60 plus temperature range. They never get a battery memory. They last over 30 years. They're fully recyclable. In fact, the electrolyte that's produced to run these batteries, you can take it out of a system after 30 years, put it straight into another one, never degrades. It's exactly the same as it was. And interestingly, you can charge and discharge, and that's important when you're looking at grid stabilization. So when you get surges in your grid, we usually go to gas peaker plants, which are quite expensive. These work in that situation very well. And of course, to go off grid, they prolong their long duration storage batteries. So anything excess of 4 hours is regarded as long duration. These are more your 8 to 12 hours at the moment, and they're improving all the time. So as I mentioned, we've got about 31% of the global resource. Where you see the energy storage there being 4% of the market, that is currently true. There's about 200 projects globally getting up at the moment. There's a large one down in South Australia being constructed as we speak at Yadamulka. But that dynamic is going to change very quickly, because we'll need 100% of what's currently mined and currently in the market for vanadium just for the batteries. That's how significant the change is going to be in the energy transition. That's the growth forecast for vanadium batteries. They're growing at about 41% year on year. And the fuel side of things, well, it's now a security issue in Australia. We have over 93% of our imports come from overseas. I think it's 89% for diesel and 79% for imported aviation fuel, which is interesting given that we've just spent about $70 billion on jets. So how are we going to do all this? Well, in this process, it's a shallow open cut mine. And what we do is we extract that ore that you saw earlier. We crush it up. We put it through a supercritical phase, which is, which is this piece here. And this is what we've spent a lot of time, effort and money on over the last few years, is developing this process. It's a closed loop supercritical process that uses a hydrogen donor solvent. So we've had to develop quite a large renewable project because of the amount of green hydrogen that we'll be producing for this process. So we use it we turn it into a solvent, and that solvent then extracts the raw oil. That raw oil comes down and is secondarily hydrotreated by further hydrogen to get us to a diesel product. But the beauty of this is this hydrogen donor solvent actually does expand the hydrocarbon chain. So you saw earlier what our oil resource was. We can get about 1.8 times of what that says is in the ground. And that's really because the way they measure it is quite dated. But the other major advantage for us there is that we then end up with the vanadium remaining in the solid material, and it has an upgrading effect. So once you've taken out the moisture and the oil and the other various pieces, you're left with a concentrate on the deck, free of mining costs. So there's a competitive advantage there. And then we extract the vanadium. We're looking at about 10,000 tonnes a day, which would be about, at the moment, it's about 8% of global output. But as I said, with 100% growth in the renewable space, it'll go up. It'll drop down to around about 4 or 5%, I'd suggest. Now, we built a pilot plant to test these theories. We spent a few years in the lab, and then we thought we'd take this to the next level of scale. Now, this is hundreds of times larger than we were doing in the laboratory, of course, and this pilot plant actually works and does what we asked it to do. So we're getting those sorts of yields on the oil, and that'll, as I say, frees us up to extract the vanadium. Now, we are in quite a remote location, so if you were here earlier and heard Amanda speaking about power in remote regions, it's a bit of a challenge. But we've been very lucky that the government has seen this opportunity and has developed or is bringing to bear, I should say, the Copper String 2 network, or the Copper String 2032 as it's known now. And that was to bring power out to the region, but of course you needed some more generation. So we had to spend some time and effort to put up or design, I should say, a 1 gigawatt power project. So this is a wind and solar project. This is something that we've got some global developers interested in at the moment, and we've got some non-binding offers to do that project. But the real key for this, and if anyone's developing a project from a clean sheet of paper, the gear that we put out there, which is a 160-meter met mast, which measures the atmospherics, it measures the wind speed and the solar radiation at that height, because that's the height of the turbines. And the other piece of equipment was the solar equipment, which allows those two pieces to speak together. Why it's important, you need 12 months of that live data to go to a financial decision on a project of that size. We're working on some water solutions. We take a common user approach with a lot of the other vanadium proponents out there, and we're hoping to get a water pipeline built for the project. We've got some great support from government. The government is building a $75 million facility in Townsville, which is called the Queensland Resources Common User Facility. Again, this is for the vanadium users to go in there and show that they can produce vanadium at that next level of scale, at the demonstration scale. And that was originally 10 million and up to 75 million, so strong support there. Now we're doing a little bit of recycling work in the interim as part of the circular economy. We're taking the waste stream of sulfuric acid production here in Queensland from Sun Metals initially and others to follow. And we extract the vanadium catalyst that's used in the acid production. We can extract the vanadium back out of that, recycle that back and use that for battery electrolyte, and we can get about a 99.6% purity from that material. And that's something we will hope to do at the Queensland facility. So obviously our mission is to do this as cleanly and as safely as possible, particularly when you're talking about fuel production. We are using a great deal of renewable energy, and as I say, that'll go to producing the hydrogen that we need. So it's very, very clean. ESG is obviously a very strong component of what we do, and we use social swing. I see they're here at the conference here this week as well, talking about that format, and I encourage everyone to have a look at that. And here we are out with the Premier at the announcement of CopperString, and when we're announcing our deal with Sun Metals. So we think we've got the right project at the right time. It's a critical minerals project in essence, and I think you'll see the size of the opportunity here compared to our current market cap is really leaves us with a lot of growth opportunity in front of us. So thank you.
Gavin, thank you very much. Did you get much sleep last night?
Sorry?
Did you get much sleep last night?
Yeah, a little bit.
A little bit seedy, little bit seedy. Now, I did not read out the rules of engagement first, so more for me. So I will hit my buzzer as our speaker stands up, and that I've got 15 minutes to speak today. How come you're so young? What are you doing down here? You know, usually we've got a sort of mean age in here. I reckon we're about 55. What's your name?
Jet.
Jet. Hold on a second, look at this. Jet's actually taken notes on the investment opportunity. Well, I like that. Well done, Jet. All very good people with vanadium. Small market cap, high held company located over Australia as well. If vehicle gets supersonic, lots of vanadium inside it. Vanadium is very different to lithium, probably better. Oh, hey. And he's suddenly become the #1 shareholder. Do you know this man, Gavin?
Not yet, but I'm looking forward to it.
What do you want to be, Jet?
I don't know. Don't know.
Don't know. Okay, going to make a bit of money, Jet?
Hopefully.
So is this your father?
Indeed.
Just some random stranger you've brought along who can drive you here? That's nice. So would you like Jet to keep you in the manner to which you'd like to be accustomed?
That's the plan. Hopefully a little AFL career awaits, but he's got to do something with his money that he earns. So.
Mate, don't do that, We've got, you've all met Jackson, who's part of our team here at Vertical Events. Jackson he was played for the Eagles. Okay, so they're not that great anyway. But anyway, he played for the Eagles, but now he's working here, Jet, and he makes good money.
Okay, cool.
That's right. Okay, so that was hilarious. How old actually are you, Jet? 12. Fabulous. Start them young. I like that. All right, back to you, back to us, back to this organisation. This man here he's actually looking pretty alive. Do you know why? He didn't stay up last night and watch the rugby. My spies tell me he went to bed early. There we go. Enough about that. Garnet is next up on stage. Now, garnet, Jet, is an abrasive material, and they use that for sandblasting, water jet cutting, and also for water filtration. And the biggest company, or the biggest producer of garnet in the world, is actually here in Australia. So these guys are pretty much looking forward to trying being #2. All right, I think that might be one of their plans. So this is an investment opportunity for you. And they're actually soon to be producer of garnet as well. The company is called Heavy Minerals Ltd, and they're joining us today to share the heavy minerals story. This is their CEO, the very fresh and alive Andrew Taplin. He's got more than 2 decades of experience in leadership. Without any further ado, would you please make him very welcome?
Thanks, Chrissy, for the introduction. And Jep, please pay close attention. And if you can come past our booth, number 49, with a bit of a critique after this, that'd be most appreciated. Big thanks to Jackson also and the team from Vertical Events for a splendid day yesterday, and I'm sure that we'll have much of the same today. As Chrissy mentioned, my name's Andrew Taplin. I'm the Chief Executive Officer for Heavy Minerals Ltd. I've been working in the resource sector for 30 years, developing projects and running operations. I've had the chance to work for the majors. I spent 25 years working for Rio Tinto, worked for a couple of juniors now, and I also worked for an Australian mining contractor with a national footprint. I've had the chance to work in Australia, Canada, the US, and a couple of African nations as well. This morning, I'm going to cut straight to the chase. I will put some more flesh on the bones, but the essence of my presentation is 4 things. We're going to invest about $110 million in a garnet project. We have got a pathway to securing the majority of the CapEx required to develop that project. We expect to be operational by 2026. And the standout feature is that when we're operational, we'll generate almost $40 million a year free cash flow after tax for at least 16 years of mine life. $40 million a year free cash flow after tax for 16 years. Our market cap on Monday was $5.4 million. So I encourage you to do the numbers and have a look at what the upside potential on that is. I should be going ahead, but yeah, I'm pushing it. Okay. Disclosure statement that you can read at your leisure. Any remote assistance possible here? That's got it. Okay, we've got a tight capital structure, as you can see. The top 20 shareholders hold 63% of the shares on issue. Our directors hold 12% of the shares on issue. We have 54 million shares on issue. At the end of Q1, cash in hand was $900,000, and we've got no debt. Heavy was listed in September 2021 and raised $5.5 million to further explore the 3 pieces of ground held by the company. And full credit to the team, they've done a great job of delivering on that promise. In Western Australia at the Port Gregory project, a JORC compliant resource of 135 million tonnes at 4% THM. That's total heavy materials has been defined. At Red Hill, just 30 kilometres north of Geraldton, we've recently announced impressive maiden drilling results, and also announced a exploration target. The exploration target's got an inventory of between 90 to 150 million tonnes at 4.1 to 5.4%. Those numbers sound impressive, but to put them into context, the majority of the resource at those 2 projects is garnet. 90% of the resource at those 2 projects is garnet, and there's sufficient garnet there to supply the global requirements of garnet for about 10 years, to put that into perspective. At Mozambique also, the team have upgraded the resource there from 59 million tonnes to 90 million tonnes at 3%. All of the resources are quality resources, and all would support development into a going concern mine. The numbers by themselves are impressive, but also another data point is that all of these resources neighbour tier 1 assets, long life, low cost assets. So the West Australian assets neighbour GMA. GMA have been operating 50 kilometres north of Geraldton for over 30 years and putting a very high quality garnet product into the global market. RDG, the Resource Development Group, heavily backed by Chris Ellison from MinRes, have just stood up a garnet mine, also about 50 kilometres north of Geraldton. And the Mozambican asset borders and neighbours the massive Rio Tinto project in Mozambique as well, which has got 4.4 billion tonne resource. So they're all quality assets. For the last 18 months, Heavy has been an explorer, and we're just transitioning from being an explorer to being a developer. So let me tell you a little bit more about our flagship project at Red Hill. As I mentioned, there are 4 key takeaways, and they all pertain to this particular project. We're going to invest $110 million worth of CapEx. We've got a pathway to securing the majority of that CapEx to develop the project. We expect to be operational by 2026, which is just around the corner, and the project will generate $40 million a year free cash flow after tax. The rest of the financial metrics are on the slide there. As I said, we've got a pathway to funding. For those of you that follow our news flow, on Monday, we announced a letter of support from Atridius. Atridius is the Dutch government export credit agency. Since listing in September 21, we've been using IHC Mining for our technical support and for our study support. IHC Mining are just local. They're 20 kilometres up the road at Yatala. And the parent company of IHC Mining is Royal IHC, a company based in the Netherlands. The Royal designation indicates that they're supported by the Dutch government. Royal IHC have been able to advocate for us based on the merits of the Port Gregory project with their Sovereign Wealth Fund, and a letter of support has been forthcoming. Subject to due diligence, all indications are that Atridius will financially support all of the Dutch content of the Port Gregory project. Royal RHC are the largest manufacturer of ocean-going dredges with significant fabrication capability and significant experience building mineral sands plants. So we expect that we'll be able to contract them to bring to the table all of the mining equipment and all of the processing plant equipment, which is a significant proportion of the CapEx. As well as that, we're engaging with Export Finance Australia. They're the Australian export credit agency, and there's also good prospects given that over 90% of our product will be going to international markets, that there's an element of funding that can come out of Export Finance Australia as well. Technically, the project is very straightforward. The garnet is expressing itself at the surface. Maximum depth is about 12 to 14 metres of excavation, and we're mining in a historic sand dune. So this is all free dig, there's no drilling, there's no blasting, this is low cost mining. The flow sheet for the process plant is stock standard mineral sands. It's a wet plant, so we'll do some mag separation. We'll use spirals, and we will screen the product to develop 4 different products for industry use, but very straightforward from a technology standpoint. From an ESG standpoint, the locality of the Port Gregory project is in an established mining locality. As I said, GMA have been operating there for 30 years. RDG have just stood up their mineral sands project. So there's strong social consensus for development of the project, and we're certainly very welcome in the locality. From a market standpoint, there's currently a market deficit. The cumulative average growth rate through until 2030 is expected to be over 7%, and the market deficit is forecast to increase through until 2030, and I'll talk about that in a little bit more detail. But what is garnet and what is it used for? As Chrissy touched on, a couple of the major uses of garnet are for sandblasting, and that is sandblasting of metal surfaces, in particular steel surfaces, before a protective coating is applied. And another major use is for water jet cutting. So the garnet is used to cut metals, but in particular steel, and it does a very precise job of cutting the metals, much more precise than the traditional techniques of using oxy and acetylene, for example. So why is it a preferred material for abrasive blasting in particular? Garnet is a particularly hard mineral. It is 7.5 on the Mohs scale, so to put that into perspective, diamonds is 9 on the Mohs scale. So it's a particularly hard mineral. We will be mining alluvial almandine garnet, and the nature of the particles with alluvial almandine garnet is that they're quite rounded in nature, unlike some other blast media which have quite sharp characteristics to them, which tend to embed in the surface of the metals and cause contamination prior to coating application. So it is the most superior blasting media. Because of its hardness and because of the nature of the particle shape, it's a very productive blasting media, and the consumption rate is particularly low, which means it's a cost-effective blast media. From an ESG standpoint, it generates low levels of dust. It's inert and environmentally friendly, unlike some of the substitutes. So copper slag, nickel slag, and coal slag are all used as substitutes for garnet. And from an environmental standpoint, they leach heavy metals into the environment. It is recyclable, and from a workplace health and safety standpoint, it's got minimal to no workplace health and safety risks, unlike some other blast medias such as sand, which generates silica and potentially silicosis for those people that are using that as a blast media. As I mentioned, the flow sheet for the manufacture of garnet is very straightforward, and it's packaged into the packages that you can see there on the right-hand side: 2-ton bags, 1-ton bags, and 20-kilogram bags. From a market standpoint, there's currently 100,000 ton deficit of garnet supply in the global market. That'll broaden to 250,000 tonnes by 2026 when we come online, and 500,000 tonnes by 2030. You can see that between 2015 and 2017, there was a significant reduction in global supply. That was because the garnet mines in India were turned off by the Indian government, and also because of the Hart Range mine in Northern Territory being shut down because of operational issues. So I don't anticipate any issues placing our 150,000 tonnes of garnet into the global market. In terms of some competitor analysis, there's 2 types of garnet. The alluvial garnet that I mentioned, that's indicated with the red marks, and also the green marks is the hard rock garnet, which is less favourable because of the nature of the particles. The hard rock is mined out of the US, and also in China. The alluvial garnet is mined out of India. That market's been turned off, as I mentioned, and also Australia. Australia is the largest producer of alluvial almandine garnet. You can see some of the users there of the blast material. That's it, isn't it? 10 minutes? 10 seconds? 4 takeaways. We're going to invest $110 million. We've got a pathway to funding a large proportion of the capital requirements. Will be operational by 2026. We're to generate $40 million worth of free cash after tax. Please come past our booth. You've got to trip over us on the way there. We'd love to sign you up for our news feed. And also we've got a draw there for some quality West Australian wine. Thanks, Chrissy.
Well done. Yeah. Actually, and again, my fault there, because I got distracted by this young fellow down here. So I started with my instructions, which were 15 minutes. I'd ring the bell at 2 minutes, with 2 minutes to go. I'll stand up with 1 minute, and then I'll start counting you down, and then I'll stand next to you and I'll physically say, hello, it's so lovely to see you. Now get off my stage, because we've got 23 other people that need to speak. All right, Jet, you said to me that you would give it all. Actually, you were asked to just give a quick little appraisal of that one. What did you think?
Yeah, pretty good, pretty good. All over the world, they're supplying alluvial garnet and hard garnet, and it's minimal to no safety risks, and major uses of sandblasting and water jet cutting.
So you're across that one. Good on you, lad. Okay, we might come back to you later on the day. We'll leave your musings. Perhaps you can choose your pick of the day for us. I should go to one of our older people as well and see if they match up as we go along. James Chirnside, are you in the audience here, sir? Where's James? Oh, you're all dressed up today. Look at you. You're all very flash. So we're talking exploration next. So Dart Mining is an exploration company. They've got large tenements, and they're located along the prolific and geologically significant Lachlan Ford Belt, and they're looking for the minerals to power our future. Historically, mining in the area across their tenement, there has been gold, silver and tin back in the 1900s and the 2000s. or do I say the 19th century and 20th century, don't I? It just
That's
gets
it, yeah.
confusing. Board and management of this particular company have very impressive exploration and discovery credentials, including this fellow here. Would you please put your hands together for James Chirnside, the Managing Director of Dart Mining?
Thanks very much. Good morning to everyone. I'll start by saying that we actually put out 3 announcements this morning. One is for those that know the company, our first results on the 3,000-metre diamond drilling program that we just finished. First 3 holes of 12. We got some good results. But for those that don't know us, let me just fill you in. You'll see a lot of forward-looking statements today. They're all fairly generic. Ours is definitely generic. Corporate metrics, well, I'll leave it to you to research all that, but we're about a $10 million market cap, 172 million shares out. About 50% of the company is owned by the top 20. I'm on the board with Dean Turnbull, who's a founder of the company. He's a non-exec. He does some work for us. Richard Udavenya, who's a legendary resources specialist lawyer based out of Melbourne. Owen Greenberger, ex-Fosterville, is starting with us on the 3rd of July, actually. Ben Hines, whose name's not up there, but he is today separately giving a presentation on our lithium drilling to the AIG in Ballarat. And then our ops guys and administrators. So where are we? Well, where's the pointer? There it is. Most of our tenements are down here in the northeast of Victoria, through the high country. It's an orogenic area of mineralisation. The mountains have given rise to some extraordinary mineralisation way back when. The rocks are the right age. We are part of the Lachlan Fold Belt, which starts up here actually, and comes all the way down through Victoria and out to the west of Victoria. So we're sort of on the central to lower part, if you like, of the Lachlan Fold Belt. We have lots of historic gold fields within our tenement area. The tenement package is large. It's about 6,500 square kilometres. 9 historic gold fields. We have at least 8 that we've identified so far. Outcropping porphyries. The most famous, or our flagship porphyry, I suppose, is Mount Unicorn, which is a inferred and indicated resource for molybdenum, copper, silver, about 209 million tonnes. The moly price hasn't done us any favours over the last 10 years or so, but it has actually popped up just late last year. It's popped up. It's trading about $30 a pound. In 2015, it was $4.50 a pound, and the worst performing commodity in the world. But that's Mount Unicorn. We've got lots of other projects which I'd like to talk to you about. So that, I hope, gives you a sense of, I forgot the lithium pegmatite swarm. It's large. Excuse me. In numbers, it's hard to estimate, but probably in excess of, excuse me, about 3,000 pegmatites. They're LCT, lithium, cesium, tantalum type pegmatites, so they're the right chemistry to carry lithium mineralisation. They were discovered, the lithium that we have was discovered by us in 2016. It's been a long time coming, but finally we're here. Now if I can get this to move, there we go. So I talked before about the Lachlan Fold Belt all the way down below the Lachlan Fold Belt are the prolific Macquarie Arc rocks, which have produced a lot of the minerals up here, up around Parkes, porphyry type structures, which are large operating mines today. Not to forget, up here at Orange, we have Cadia Ridgeway, which is Australia's largest producing gold mine at about 1.2 million ounces per annum, owned by Newcrest. So the work schedule this year, we are very busy. I should also say that we are very self-sufficient. We have our own gear. We operate our own drill rig. We also get contractors in, but that has enabled us, certainly through COVID and everything, enable us to continue operating uninterrupted. So we've got basically two flagship projects, which are the, oops, sorry, wrong. How do I get back? Help. The red button. I gotcha. Okay. So here we are, the flagship projects, Dorchap Lithium project. Now that is that's in joint venture with SQM. SQM are the biggest lithium company in the world. They're funding all of our exploration on that project. That joint venture was started last year in July. We actually started talking to SQM back in 2018, but it took us about 6 months to negotiate a farm-in joint venture arrangement with them, which was signed in July last year and kicked off. So the last 3,000 metres of diamond drilling, which we've completed last Sunday, was all funded by SQM. And we have a technical advisory committee set up with them where their head geos and technicians and our exploration managers and myself actually sit on the committee. We work out the proposed exploration activities and plans, and they're great. I mean, what it gives us is fantastic access to some of the very best lithium, chemical analysis, exploration techniques, and that kind of thing. So that's been a huge win for Dart. It takes a lot of pressure off shareholders. They don't have to continue funding our exploration activities, and that is set to continue. Granite Flat, wrong again. Granite Flat, which is here, that is a copper gold porphyry. We've done a lot of work on it. We've done a very large geophysical survey across it. We've taken 7,500 geochemical samples at surface. It's tough country, but it is highly mineralized, and Granite Flat is a very, very prospective project. Originally picked up and explored by CRA back in the mid-80s, funnily enough. Our other projects include a nuggety style gold thing, which is, funnily enough, out near Fosterville. It's about 40 k's from Fosterville. It's the only nuggety gold project that we have. We just completed a big LiDAR survey across that showed up about 4,600 historic workings, all along a very predictable line or strike. And we've got a lot more work to do on that project. Sandy Creek is a gold show not far out of the township of Wodonga, Albury-Wodonga, on the border of New South Wales. And we've done a little bit of drilling there. We've got a lot more to do too. And down in the Buckland Valley, which is just further south of Albury-Wodonga, we've got a very exciting gold project, disseminated gold going up to 3 grams a tonne at surface from soil samples along a 17.5 kilometre strike, which is still open to the south. So Dart is not spoilt for projects. We have so many projects at our disposal, if you like, and we've created a sort of an approach and a workflow, if you like, where we're managing 3 or 4 of them at a time. We're often subject to various delays on either permitting or possibly weather or things like that. And so we move off one project onto the next, move it along a bit further, back to the other one. So that's the way we kind of work. And that's why we have like up to 4 or 5 projects on the go at one stage. Our business development, we are actively seeking joint venture arrangements on our projects. The porphyries, as you guys would probably know, are very expensive exploration targets, and we, obviously we do all the hard yards early on, soil geochemical sampling, some drilling, that sort of thing, and then we hope to be able to tap into some of the bigger mining companies whose exploration pipelines are typically very short at this stage, and that's a whole different story. But yeah, the majors are all looking for good exploration targets or development targets, and that's the basis of our business model. I mentioned before that we are our operating model. We are very self-sufficient. We have our own rig in the field 365 days a year. We have our own guys pulling the levers. We have become very good at operating in a very harsh and difficult environment. We had a metre of snow on the rig on Sunday when we demobbed from the Dorchap Lithium project. I think we'd be one of the few exploration companies operating in a metre of snow in Australia anyway. So that's the business. This here, and someone suggested I'll put this in the presentation, that is a pegmatite dike. That's Ben Hines, Dr. Ben Hines, who's on our exploration team, who's the one who's giving the presentation down at Ballarat today. And this is a spodumene, large crystal pegmatite dike. You can see they're very difficult to pick out from aerial surveys. They were quite challenging. But what has helped us enormously, not only on the Dorchap Lithium, but the Rushworth Gold, Buckland, are LiDAR surveys. So the LiDAR sees through the canopy. It's accurate to within about 50 mil. And so we can get incredibly accurate topography. We can see patterns of disturbance, if you like, through historic workings. And God bless them, CRA back in the 80s put in about 60 drill pads at Granite Flat, and we're able to identify all those. On top of that, we've got old tracks that we've identified and stuff. That has significance because it means we don't have to pay to clear them through vegetation offsets. So LiDAR has been an enormous benefit to us. And just that's a bit about SQM quickly. So 50-50, SQM can earn up to 70% on our Dorchap Lithium project by spending $12 million. And then from that point, it's dollar for dollar. The way we look at it, $12 million will get us to a point where we've either got a development asset or we walk away. And so if we've got a development asset, it will be hopefully imminently fundable at that stage. That's a little bit more on the project. We're around the corner in the booth. By all means, please come and talk to me. There's Granite Flat, some of the geophysical survey we did, that sort of thing. And, the markets, and there's a few operational images. And that was on Sunday. There's the driller's camp, and that's the track in. Here's some lithium core. That's a DDH1 rig. That's Dart's rig, water truck, lithium core, etc. I'm out, right? Thank you very much, everyone. Good to see you.
That was great. Thank you so much. And that could explain why I couldn't find you this morning, because I went up twice to Dart and they're actually located up near the barista. I saw the black backpack, but no you. So you're obviously very busy. Thanks for sharing that with us. Right, next up, a prospect that is smack in the middle of the world-class eastern goldfields of Western Australia, Mount Malcolm Mines. Now, it exists purely because of the local knowledge of its founder, Trevor Dixon. So the contacts that this fellow pulled out of his little dusty red book, contact book, to amass the size of land package he signed up there. Took him about 40 years to make all these contacts. He's made good use of them. So we're going to find out what he's planning for Mount Malcolm and why he chased so hard, why he believes in it, and if we should believe in him. Would you please make him very welcome, everyone? Trevor Dixon, Mount Malcolm Mines.
Thanks very much. Thanks very much, Christy. And thank you all for your attendance today. It's really great to see so many in the room. I'm sure you're all very discerning investors. and you would very much like to hear the full story on Mount Malcolm. What I'm here to tell you today, in the next 14 minutes, is a bit of detail about how we've put this together and why we've put it together. And we'll go down the rabbit hole on a couple of the prospect areas that we really think are going to give us a real big lift here. What's important is, of course, location. And we think the Leonora Belt is a really important location to be in. And importantly, the rocks there have been delivering world-class deposits for many, many years. What you see here, Mount Leonora and the SensOre Ltd processing plant, a little bit of history here. Gold was first discovered in the Leonora region at Gawler, just some 3 k's south of Leonora by a couple of Welshmen. That mine got into production in 1896 and continued all the way through until 1964, an enormous feat. Had a short break and then restarted in 84 and has operated continuously ever since. This is the depth of the mines that we have in our region. And we're really happy to have the rare earth space dominated by the Lynas rare earths mine just over in Laverton there, and we'll show you that shortly. But no, it's a really good place to be for all the right reasons, that it has the infrastructure for us to get on with the job. Leonora, for those that don't know, here, just up from Kalgoorlie, 200 k's, couple of hours drive, nice facilities there. But the real driver for us is the fact that we're surrounded absolutely in amongst some of the best mines. 5 million ounces, 4 million ounces, 7 million ounces there at Wallaby, Thunderbox, Agnew. We're in the right place. Location, location, location. And I'm not into real estate either. But that's the place to be. And of course, the Lynas operation over here at Rare Earths, just south of Laverton, that is the largest rare earths mine in the Southern Hemisphere. So look, we think we're really in the right place, and the rocks that we have on our property is something to behold. And as Chrissy mentioned, how did we put all this together? And I get asked this quite often. You're looking at some 270 odd square k's of ground, some 150 tenements came together here, 15 transactions to pull this together, herding a fair few cats, I might say, to make this all to come together. But of course, we had to break it up. We've broken it up, and this is our main project. It's called the Malcolm Project. We've broken it up into 7 distinct areas, all with credible targets on it. The Malcolm Project is absolutely spoilt for targets, so we're really rapt about that. Let's move on to some rocks. We've put together a detailed geology map. It's still a bit of a work in progress, but what you're seeing here is the Keith Kilkenny lineament. You saw that on the previous slide there, and that runs for 30 k's up through our property. This is why it was so important to me to get the right rocks for our business. And we certainly have them. Metal fertile intrusions, short geology lesson here, folks. That's the red bits. They come in hot from underneath. They intrude the existing rocks that are there. In those rocks are mineralizing fluids, chemical soup, if you like, and they form in the structures, and it's those alteration fluids and the structure that you have in your rock units that deliver the deposits. There's your quick geology lesson. And of course, we've also got, we're in amongst the copper zinc terrain, Teutonic bore, Bentley Jaguar, very high grade base metal deposit there. We're certainly in the corridor for that, and our business is chasing that. We have an excellent exploration manager, Dr. Tony Roach over there. He's working with us to identify what we need to work out to make this and our business work for us. Rare earths, why not look a gift horse in the mouth? Here we've started our work. We've established already a 4-kilometre strike. Results comparable to the local industry or our peer groups. So it's coming together for us. It is early days. We'll drive down a little bit on that shortly. There's our rare earths environment. Mount Weld over here, the Malcolm project. We've got the Mount Azra, and of course, Marquee there doing some work with rare earths in our district. So that's an emerging district. It's only just beginning here, and Mount Weld is a leader. How are we going to make this happen for you folks? Is through a detailed, methodical work to the plan, pull it all together via these steps that you see on the screen today. Pretty much exploration, mine development 101. Bit of a pathway to that, high-grade gold values, get the preparedness happening, bit of a time frame there for us, and on this scale, we see value coming into our business as we work our way up the value chain for our members. Again, stepping through the depth of the portfolio, target generation, prospect identification, drill targeting, drill testing, mineralisation continuity. This is what we're all about. We're about exploration company 101, and we're going to walk the business forward with that depth of targets that we have in amongst our portfolio. We're going to drill down now, down into Calypso, Malcolm Mining Centre and Malcolm Dam, and give you a real feel for the work that we're getting in amongst there on those particular prospects. So they are 3 of the 7 at the Malcolm prospect. So we're going to do a bit of detail on that. Yes, it looks like a whale shark, but it's not really. What we're showing here, porphyry intrusions here, that's your metal fertile intrusion coming into this system at Calypso, and shear systems then depositing ore materials for us. And this is our flagship. We have historic mineralisation here at T2. BHP and North Limited came into this prospect and drilled out that mineralisation in the 80s and the 90s. And they came up with a target of some 2.9 to 3.9 million tonnes of ore at around that 1.6 to 2.2 grade. That's an exploration target, and we're looking to build it into a maiden resource of some 300 to maybe even 500,000 ounces as our maiden JORC compliant resource. And that's the process that we're going to walk the business through. You saw how we were going to do that on the previous slide. Great grades. These are what we call the Constance lodes. The Constance lodes were named after my mother. She was the mother of 7 children. She passed away sadly last year, but gloriously at the ripe old age of 86 of natural causes. Absolutely tremendous way to go. But look, she's left a legacy. There's many more lodes to build in amongst this, but it's coming up trumps for us at the moment. These are fantastic grades to be working down plunge of this open pittable material here. Nice big wide intercepts 20 to 25 metres. So that's coming together well. But of course, you might ask, how the hell do we compare that? Well, you do it by comparing it against something like this. This is the Ltd deposit, about 60, 80 k's to our east, some 8 million ounces there. And of course, there you have dear little Calypso, the whale shark, just coming into the top of the image there. This is where we're at. This is what we think, Dr. Tony thinks, we're going to bring out of this, this exercise of resource definition and drilling to bring into the business. It's certainly ticking the boxes for us. Calypso is a porphyry dike, that intrusion, conglomerate host rock, magmatic hydrothermal alteration, shallow dipping forming the shear systems there. Here you're looking at the shear systems that drive the Wallaby ore zones for gold fields. Rare earths, we've got this little rock over at the booth there, so by all means come and see us. Doing the genealogy. Tony's very keen on making sure that we've got the right fluids, we've got the right makeup, we've got the right measure of what we need to do to work towards a rare earth discovery on the Malcolm project. VMS, I mentioned that earlier, north of us, the big Jaguar Bentley deposit. We've been working recently, and it's early days for us, as we think the critical metal space is important, and that's what we've been able to put together. We've gone back through the database and some old Chevron data. These are IP profiles that you see here. Tony's cut this at our Golden Crown gold deposit here. Just west of that, we've got a significant anomaly. We're looking to do some extra work on that, and let's see if we've got some volcanic massive sulfides available for the shareholders of Mount Malcolm. There's our team. Lawyer, myself, mining engineer, geologist, mining engineer. There's some stats. This is our corporate side. Here's our stats. Very modest market cap, worthwhile you investing, tight register, and that's it. That's our breakup there. We really care about where we work. As Christy highlighted, I've got 40 years experience, a lot of that civil earth moving contractor in Leonora. So I'm very well versed with dealing with the local community and looking after the environment. It's come together well. This is to tell you all that I haven't been just rabbiting on about telling you a whole lot of porcupines. This is our disclaimer, and we're over in the far end, and I'd really love you to come to our booth. We've just completed a rights issue. We have a shortfall. It's available to you. Thank you very much.
Like that. Glad you're not telling porcupines. That's fantastic. You've got an engineer to back you up there. 10 o'clock. Well, we're supposed to be 10 o'clock. We're 9:45. So we're running just a little bit behind at this point in time, but we'll make it up during the morning tea break. I don't know. Are you allowed on stage wearing that? Are you coming up wearing that, are you? Is that hand knitted?
It is. Big thanks to Auntie Marg for this one.
Oh, that is gorgeous. I like that. All right, this is Damien Keys, everyone. He have the knitted scarf. Who knitted the scarf, did you say?
Auntie Marg.
Auntie May. God bless
Yeah.
Auntie May.
Good on her.
That's gorgeous. All right. So he is a managing director of Sunshine Gold, and they are a North Queensland-based and focused explorer. He's a geologist by trade. Have a look at him. He's worked here in Queensland, then he buggered off. He went to Western Australia. He was involved in a couple of, little players over there. I think what we have, maybe Silver Lake Resources, Black Cat Syndicate, Spectrum Metals. He knows what success is. But he has returned very happily to the land of mud crabs, barramundi, and rugby league, and Auntie May's homemade scarf to set up Sunshine Gold. Will you please make him welcome, everyone?
Thank you, and thank you for the warm welcome. So I'm here today to talk to you about a recent transaction that we've just made, which is really going to transform the business within Sunshine Gold, soon to be Sunshine Metals at tomorrow's EGM. Standard disclaimer. A quick snapshot. We won't dwell because it's as per the rest of the market, it's not a particularly pleasant story over the last short while. But we have got a market cap of about 15 million and significantly cash in the bank, and directors have tipped in 3.2 million of their own cash into this venture. So we are very serious and committed to the ongoing development at Sunshine. We are proudly Queensland-based, Queensland-focused gold and base metal explorer. And as Amanda said at the breakfast this morning, there's days where it's always good to be a Queenslander, but there's days where it's particularly good. We've got 4 projects. We are active and highly active in 2 of those projects, being the Ravenswood Consolidated Project and the Triumph Project. We do have a copper project and gold tungsten Hodgkinson projects, and we'll be looking to divest those in due course. And the core focus is on Ravenswood and Triumph. We are based out of Townsville, so a head office in Townsville, one of a handful of companies with an ASX base in Townsville, which means we can be on site on our tenements in an hour and a half. We're highly active. We've drilled 35 kilometres of our own drilling. I'm going to tell you about another 6 kilometres of drilling that we've inherited, which is highly already yielding results. And we have got leverage to multiple high-value metals. And importantly, I'm going to tell you about the transformational transaction at Ravenswood Consolidated. The leadership group, and apologies for the mug shots at this time of morning, but you'll find Paul Chapman at the booth as well. Experienced team have been there for quite a while through the resources sector, all around Australia and the globe, project development, acquisition, and operations experience. The field team, give the guys a plug. They're out there, out bush day in, day out. Currently got them chained to the core yard, logging 6,000 metres of diamond core, ably led by Matt Price, our exploration manager. So Ravenswood Consolidated, you can see 3 different colours in the lease holding, and that represents our accretive transactions within the district to produce a really dominant land holding in highly prospective tenure. The district has produced over 20 million ounces of gold and 14 million tonnes of base metal and gold VMS ore, so volcanogenic massive sulfide. We've got a resource with this recent acquisition of just under 5 million tonnes at 12% recoverable zinc equivalent, which is a fantastic base to move forward. We've got a small gold resource that's emerging and certainly has significant upside potential. And importantly, there's significant infrastructure around the project. So we've got our Townsville head office, there's zinc and copper refineries in Townsville, and there's road and rail that passes through the project out to Mount Isa, where Glencore operate a copper and lead smelter. So we have built this portfolio at Ravenswood over 2 years. We've done it for under 4 million cash, and we've built a substantial resource base. And importantly, we've built an excellent exploration portfolio in the district. Started with the Ravenswood West project. We've got a fantastic suite of porphyry targets through there, where we've got an exploration target already built in. The Lighthouse project, which we farmed into at the start of the year, no cash outlay, but 2.2 million in spend over 3 years. And significantly, this Greater Liontown acquisition, which adds the polymetallic resource for just over $3 million cash, and there's 2 milestone payments. So the portfolio now looks like this. The white dots represent base metal targets. The yellow dots represent gold targets. We will focus our efforts initially on the Liontown and Liontown East area, just to the north of the historic highway reward mine, and growing the plateau area. The Liontown acquisition came out of the administration of Red River. We've picked up all the exploration assets, not the production, not the mill. So we don't wear any care and maintenance or any environmental rehab liability. It does give us 80 kilometres worth of the prospective Mount Windsor volcanics, highly prospective for these VMS systems. And we're going to touch on the resource growth potential in Liontown itself, but also one of the most exciting prospects we've got on our books at Coronation. This is a long section of our resource at Liontown. It's multiple stacked lodes. In the footwall of this system, we move into copper gold rich domains. And you can see there's big gaps in the resource, limited by how much drilling there is. And those gaps certainly aren't barren. The drilling that is there in the main gap zone between Liontown and Liontown East, we've got 1.75 metres at 50% recoverable zinc equivalent. So we're confident the metal's going to be there. It's just a case of drilling this out. When we bought the project, we reviewed the database more and realised there was 6,000 metres of diamond that had just been completed by the previous owners that was unreleased to the market. And significantly, this 6,000 metres saves us about at least $1 million worth of drilling and about 2 to 3 months worth of drilling time. The resource drilling is infill and extensional, and will be used in a resource update later on in the year. And significantly, there are some cracking numbers coming out of this already. So this is the best free kick we've had, 8.1 metres at 10.7 grams gold and 3.7 metres at 6.5% copper, highlight the copper and gold potential within this VMS system. So although we report in zinc equivalent, it is the dominant metal in terms of value, but there is significant copper and gold upside. And that extends out to nearby. So just 1 kilometre to the west of the main Liontown resource, the footwall is called the Carrington, the gold rich footwall. These are gold intersections, and you can see 1 kilometre to the west, we've got 33 metres at about 2 grams from 12 metres depth, and another 17 at 3 from 20 metres. There's sparse drilling in that area. We think we can make a big impact very quickly with shallow drilling. Coronation, this is the one that keeps me up at night. This is the one that gets me excited as a geologist. It's the highway reward mine was a historic mine, mined largely in the 90s. It was 4 million tonnes at about 6% copper and 1 gram gold. That's bonanza in anyone's books. It's akin to the DeGrussa discovery in WA, similar mineralisation styles and about half the size. To the north, 2.7 kilometres north of Highway Reward, we've got the Coronation prospect. It's got 13.8 grams per tonne gold in rock chip sampling. We've got abundant barite veining, which is a fantastic indicator of these VMS systems. And importantly, the previous owners completed a really detailed gravity survey, which picked up the little red dots in the top, which represent really dense rock. So that's telling us about these massive sulfide pipes. They're undrilled. We are super excited to get out there and drill test these, and the potential is for another highway reward, and certainly a similar scale to the anomalism up there. The original tenements had a 15-kilometre long porphyry belt. We've put an exploration target, essentially a pre-resource based on just a fraction too wide drilling. We're confident in the top 100 metres there, we've got 5 to 8 million tonnes of copper and molybdenum ore. And we've got 4 more of these drill to find porphyry targets as we move down the belt from north to south, the green line on the map. The Bank, Keens and Gagarin. And importantly, we're seeing up to 6 grams gold at Keens. So we do expect we will get some gold in some of these systems. There's also Wilbur's Hill. Wilbur's Hill is a breccia style gold target not dissimilar to the nearby Mount Wright mine. We've worked that up from scratch, completed geophysics, put the first 2 holes into the prospect and then intersected fantastic breccias. Unfortunately, it was a bit too hot, the system, elevated magnetite, but we did get 400 metres at about 4% pyrite throughout. So we know it's likely to be a fertile system, and we're going to step off to the north for the next round of drilling there. We've got the Lighthouse farming ground plateau resource. I've got this rock on the bench out at our booth. It's a lovely breccia pulled off the surface of plateau, 50,000 ounces defined to date, just up the road from the Pajingo gold mine. The resource is open. We will be back here doing further work this year. And just to quickly touch on, the talk has largely been around Ravenswood, but we do have 120,000 ounce shallow gold resource proven up at Triumph, which is just south of Gladstone in central Queensland. We've just completed a 3,000 metre RC survey, RC drilling campaign, and that was largely a step-off campaign. We got really significant mineralisation in big stage step-offs along the southern corridor. And importantly, 600 metres south of this southern corridor, we hit a new 2 holes, intersected gold in both holes, a really significant pathfinder to a new corridor at Triumph. And we'll be actively moving back into far south and extending this resource too. So there's a lot of catalysts here for a re-rated share price and time to get this show on the road. We've got new discoveries in the Triumph and resource growth at Triumph. We've got certainly the biggest bang for buck is going to come out of our Ravenswood Consolidated project. So resource growth, that gap zone with limited drilling, but encouraging drilling to date, is an obvious target. There's enhancement even just from further met work at the Liontown resource. We can enhance that resource pretty quickly, we believe. And significantly, the biggest catalyst is obviously new discovery. We've got 25 IP targets in that Liontown Waterloo corridor that we haven't touched on today. That Coronation copper gold system, which is very exciting, and those shallow gold resources off to the west of Liontown itself. Plenty of scope to really get this share price rolling in the near term. So in summary, we're Queensland based, Queensland focused, set up in Townsville, in fantastic underexplored districts, and that 35 kilometres of our drilling and another 6 that we're active on at the moment will form the basis for plenty of news flow in the near term. Thanks a lot. Come and see us at the booth just up the stairs.
That is a truly awesome scarp, isn't it? And just a reminder to you that we are doing a very special draw just before morning tea this morning. You need to be in the room though. You need to be in the room to potentially walk away with a silver ingot, thanks to the team at Investigator. So if you want to win something a bit special, make sure you're in the room for that one. We're going to shift gear now. We're going from exploring and mining to the world of mine technology and the role that AI and machines play in unlocking the resources that we need for the future. Now, this is the only exposure to mine technology on the ASX because most of the mining tech companies are actually private. SensOre is well priced. They're ready to have you come on board with them. This is the brains behind the investment opportunity for this space for you. Would you please welcome their co-founder and CEO, Mr. Richard Taylor.
Thanks very much for the introduction. It's always exciting to get up here and talk about mining technology. I think we've seen lots of presentations with we're talking about the critical minerals challenges of the future, but we set SensOre up really to take advantage of what's happening with data science, artificial intelligence, and being able to improve discovery rates across the industry. And we've got a powerhouse on the board and on a technology team, all coming out of big research groups previously from Barrick, BHP, Rio Tinto. If you're looking there, you've got Robbie Rowe, who is ex-VP of exploration for Barrick outside the Americas. Decades of experience. His specialty was in uncover, being able to find deposits at depth in challenging geographies and being able to discover the mines of the future. We've got Adrian Mango, who came out of BHP. He's the chairman of Pampa Metals. We've got Tony O'Sullivan, who came out of Deep Green, which became the metals company, looking at retrieving nodules on the seafloor for nickel and battery metals. Our technology team's headed up by Alf Ego, decades of experience, head of CRA research originally, geochemist, brilliant scientist, backed up there by a team of PhDs, young, keen, coding, developers, specialists in emerging areas of artificial intelligence. And we've got Des Fitzgerald and Jeff Keatley, geophysicists with decades of experience, oil, gas, major discoveries under their belt, all now looking at how we make use of big data. So the discoveries that we're going to have that are going to meet the challenges of the future aren't going to come for things that are sticking out of the ground. They're going to come out of things that are buried, complex geological settings, things that are there that so far haven't been found. If you map up all of the data over Western Australia, we've done a really good job of mapping outcrop and assaying and sampling that. Most of the mines come from a result of near mine exploration on those or others. Our system shows that there's a hell of a lot more to be found just in WA. We've barely scratched the surface of what's there undercover so far, particularly gold, lithium, those greenstone belts we're looking at now with fresh eyes, challenging existing assumptions and being able to make new discoveries for our clients and ourselves. But what really gets us excited is about the demand that's coming. We've got another 3 or 4 billion people that are going to be in the world in the next couple of decades. The changes of living standards in developing countries and energy intensity of those industries, all coupled with the energy transition away from hydrocarbons towards battery and electrification of those areas. And I think there's a few references this week to the IEA report. We looked about just how many new mines we're going to need to meet the base case for energy transition. You're looking at 17 new tier 1 cobalt mines, 50 lithium mines, 60 nickel mines, and our rates of discovery and particularly major new mines, we're looking at 1 or 2 a year. At the current rate and with the current technology, we're not going to be able to meet anywhere near the battery metal requirements to make things efficient for us to transition to that new economy. And then for those of you who've looked at battery pricing at the moment, it still makes no economic sense for a house battery or potentially for other areas. We still need to get the lithium nickel prices down to make batteries affordable and cost saving, even with the increases in gas and other energy prices. So we need to do things differently if we're going to be able to make critical minerals work for us. At the same time as demand's going through the roof, a bit of work that's been done by an expert called Richard Shoddy in Minex Consulting looks at the fact that we're mining lower grade deposits, mines are getting deeper, they're becoming more challenging and they're moving more waste. So while you've got this massive increase in demand, supply is also being constrained by the fact that we're just mining what we know about already, and particularly poorer deposits with larger footprints that we've known about for years, but which haven't been economically viable until the present. We need to do things differently if we're going to be able to address this as a sector and an industry. One of the responses, we can explore more. So the budgets for exploration are going through the roof, particularly for base metals over there, and we're placed in most of those markets at the moment. So we're benefiting from that trend. But it's not seeming that the discovery rates are responding. So the more you explore, you would think that there would be a correlative improvement in discovery rates, but that's just not happening. We're spending more money. The discovery rates are not keeping pace with the new resources that are coming on board. So what we think is different is using data science better. And I think if you know much about the geologists and how they've kept data, many geologists like being out in the field, and being trapped behind a computer is not something that necessarily attracted them to that career to begin with. So their treatment of data is usually kept on one format. It's handed between companies. The company might sell the asset at one point, so the databases are in different areas. When we get data from our clients, some of the data is geolocated in different states, different continents, different formats. So we have to work on automation of how we clean ingest very large data sets in very different formats. So just, I think Australia made a big investment earlier on, about 20, 30 years ago. They made companies report their data publicly to the government. And we're one of the few countries that did that early on. We're now benefiting from, in WA alone, more than 70,000 different company reports. But all of those are in different formats, different units of measurement. When they report to government, they use 2,500 different ways just to describe gold. And if you're looking at that for multiple elements, you're looking at thousands of different ways interpreting it. So most people give up. They look at all that public data and they go, I look at it for my tenement, but why would I organise it for my neighbours' properties or for the region and look at that big picture? We've come up with ways to be able to streamline that, be able to ingest that, and we've done that for WA. We've done it for parts of Queensland. We've done it for New South Wales and South Australia. Now you can seamlessly get access to that information through our data platform called the SDC platform. And it's one of the byproducts that we do for machine learning. Our CTO will say, garbage in, garbage out, diamonds in, diamonds out. So all of our efforts in improving and collating that information into a data cube, which allows mining companies, investors to be able to review that data in real time when a new discovery is made. All of that is important to make a machine learning, artificial intelligence, be able to make good pattern recognition activity. Those of you who've played around with ChatGPT, you'll know if you ask it a question where it's got lots of different ways of being able to search the internet for reference. So if you wanted to write a job advert for a receptionist, it does a really good job of that because it can find thousands, maybe tens of thousands examples of job adverts for receptionists. If you ask it a very obscure question about an anomaly in some area, it does a very poor job of being able to answer that question because it doesn't have a training data set. So that's why we've spent all our time and energy putting together this data platform. We have some software tools that are, I guess, world-leading geoscience information that we're selling to many of our clients and utilizing the data that we've put together to be able to analyze information differently. So how does the artificial intelligence work? I always get asked that question because there's always a deep skepticism about letting the computer do things, whereas a human could be in behind it. When you look at geology, it is a pattern recognition exercise. A geologist goes into the field with the knowledge of the deposits they've seen or studied, or their professor talked to them about. That's their training reference data set. The information they collect on a tenement, that's the data, that's their platform that they're searching for. They're trying to align their experience with the data that they're seeing. What we've taken is we've taken the computer and we've asked them to analyze not just 5 or 6 different deposits that the geologist might have visited, but every porphyry deposit in the world, every ISCG deposit in the world, being able to analyze what are the variables that make that special part of the earth a major mine. And then we look for this sort of fingerprint that we develop for those deposit styles at different depths, in different locations, in different geochronology. We look for those fingerprints in our data cube and then highlight them as the targets of the future for our clients to be able to utilize. Just a quick view on some of the products that we have. This is our platform. It looks like a Google Maps for geoscience information. We're finding a lot of investors like the ability that when someone makes an announcement to be able to really quickly pull up all the other layers of data, be able to see what their neighbours have done, see if someone's drilling nearby and twinned a hole, if it's a new discovery or recycling of old information, see if it's on a big structure or a small structure and that size potential, and not do it manually in a process that takes weeks and weeks. I wanted to look at just quickly at some of the really exciting things we do with geology. So geology is a qualitative science, right? It's the observations of geologists in the field and their thoughts and beliefs about what's happening in that area and what that rock is that they observed or how they mapped it in that area. So what we do with geology that's captured in maps is that we pull it together break it up into pixels, essentially, to areas of the ground, 400 by 400 or 50 meter by 50 meter, and code it to different classes of geology. So that way we bring it in as different layers. So a fault direction becomes a layer of quantitative information. Rock observations become different data layers within our system. The metadata that sits behind the maps, all the reports, they come in as observations associated with that geolocated point that you can search within that process. And that's where you can marry it up with the geophysics and geochemical information to create a fused data set. Now, with advances in ChatGPT and others, we're looking at the association of words within reports. So word cloud diagram here is in relation to LCT pegmatites. So what were the observations in reports going back decades that led people to say that they'd observed a potential lithium-bearing pegmatite in a location? So these are all the things that are most closely correlated in Australia with the existence of a fertile lithium system. And we can apply that sort of data-rich understanding to say, where else have there reports that exist like this and these factors that are previously unrecognised by industry or by our competitors? The products I sort of talked about before, I don't have enough time to go into them, but they're very exciting different ways of being able to image geophysical information. So here's an image of some work we did in Indonesia recently, looking at targeting major copper gold systems over there. You're used to seeing images that have lots and lots of noise, lots of colors, etc. We're blowing away that noise by using machine learning approaches to noise reduction and really highlighting those hot zones in the depth that pull together targets for drilling and make it easy for people to review that data. Another case study is Julimar, the famous Chalice discovery that turned a 20 million explorer into a multi-billion-dollar company. This is airborne EM technology. So that discovery was made by analysing the bottom picture, which is retail geophysical information. Airborne EM only works down to 300 metres, and most of the noise in that lower image contains no data or information. We're able to be able to highlight the two parts of the ore body in the Chalice thing with those dots towards the centre, those white hot zones, and you can't infer that it's cut off at that level. That's just where the signal no longer carries any valid information. The rest of it is just distraction from that, so we can focus our clients into those areas. We've pulled together portfolios for companies. So Deutsche Rostoff is a lithium company or oil, gas and lithium company looking at improving their battery credentials in Australia. They said, come and find us 8 projects near major lithium producing assets, pull them together into a joint venture for us. And we were able to realize that lithium and gold occur often co-located together. Many of the presentations today talked about greenstone belts and lithium being there. We know that's the case because it's about 1.8 kilometres from where the gold is to where you'll find the lithium, which is the last exhale of that event that created both areas. Many gold companies can't take advantage of this opportunity, but we've been able to unlock value for our clients by doing it that way. Just quickly, strongly cash growing company. We're going to about $5 million in commercial revenue, about $2 million in government revenue at the moment. That's growing strongly. June and December are our biggest quarters, and you can see the strong increase in revenue over that period. We've only got about a couple of hundred clients at the moment. You can see we're in between that second and third growth diagram at the moment. There are 4,000 companies that we hope to bring on board to our books in the future. We're poised for growth. We're tightly held, market cap of about 20 million at present, 72 million shares on offer. We've just completed a capital raising SPP and placement, raising 1.5 million, and excited about where we're going to be going and growing that area. So think about mining technology. It's outside the box, but it's going to be the future. So let's come and see us at our booth. Thanks very much.
Right on. Thank you so much. For those of you who wonder, why doesn't that lady say thank you straight away? She's particularly rude, those West Australians. They don't have good manners. It's because what we're doing is we take that presentation and we clip it and we give it to the ASX. So if you've got my name commentary over the end, the ASX aren't particularly fond of that, are you, ASX, if you're listening? So that's what we're doing. Right. Look at this fellow striding up here. He is one. Are you a hero? If you pick up on your chairs around the place, you would have seen these flyers. So have a little look at these flyers. So everyone likes to do things a little bit more, a little bit differently. And Pan Am, Auntie Pam, has put together this one to promote what it is that they're doing. So you can read all about them there. I could tell you all about them. I can tell you that they have the most advanced lithium project situated closest to one of the largest electrical vehicle manufacturing hubs in Southeast Asia, that they've just announced an MOU with VinES Energy Solutions, which is a really important step forward for them. Or I could let you read this graphic novel 101 and listen to this fellow here. This is Paul Locke, and Paul is their managing director. Would you please make him very welcome?
Thanks. Okay, so I suggest you listen to Veronica, but I'll get started. That was a great talk. I've got an interesting point. We do a lot of work in Southeast Asia and we've visited geological libraries. And one, they'd never seen a foreigner in the library before, which for us is fantastic because it's all fresh. So I like the SensOre stuff, but when everyone's looking at it, it makes life a bit harder. Anyway, a little bit about Pan Asia Metals. And what I'll do is start with a little bit about Asia. So it's not really well understood what's happening up there in Southeast Asia, or Asia, which includes India and China, and Southeast Asia is the largest auto producer in the world. Just over 55% of autos are produced in that region, and that's going to flow through to electric vehicles. In fact, it's probably going to grow because there's 3 billion people in India, China, and Southeast Asia. It's got a big young population moving into the middle class. And over 90% of bikes and three-wheelers are manufactured in Asia. So if you've been to Asian cities, you'll see there's a lot of motorbikes around, except Myanmar where they banned them. But there's a lot of motorbikes around and a lot of three-wheelers, particularly in China and India. And this is a massively big emerging EV market. I just read this morning that a Chinese manufacturer is manufacturing a bike with a solar cell on it and it's self-charging. That's pretty interesting. And costs. So this is a really basic structure of a lithium conversion facility outside of Asia. And you can see that it's assuming the total cost is $100, $35 or 30%, 35% is reagents, so all your inputs other than lithium. 35% is energy, 15% labor, and 15% just odds and ends. So in Asia, our reagents would be about 15% lower because that's where all the reagents come from. Our energy, up to 50% lower, particularly in Vietnam. The energy cost there for us is 50% of what it would be somewhere else. And labor, 50 to 80% lower. And it's not that the labor is not smart, it's just a much lower cost environment. And there's a lot of labor which is very experienced in processing and manufacturing. So it's a functional labor, including management. What this means is that to operate up in Asia is a lot cheaper. So you get certain advantages. And that's why Pan Asia Metals is up there and looking to go downstream. It's the cost environment, makes you more competitive. So we had about 33% to the bottom line. Cash goes straight through to the bottom line. And that's the advantage. So where we are, we've got two projects or two initiatives. In southern Thailand, we've got the Rionket project, which is a concentrate through to CAM initiative. Our projects are well progressed. We'll be producing pre-feasibility studies this year, and in fact, be lodging for mining license applications on the two prospects later this year. And then to the north in Vietnam, we've got an MOU with VinES Energy Solutions. It's a battery manufacturer, manufacturing batteries. Its sister company is VinFast, which is shipping EVs to the US as we speak. There's a lot of companies working in the environment, all the key brands. There's battery facilities and EV manufacturing facilities being operating and being built in all of the major Southeast Asian countries. So what we're seeing is a movement from North Asia, from China, Korea, and Japan down into South Asia, a lot like the tiger and cubs dynamic back in the 70s and 80s. 4 key points about Pan Asia Metals. We're the only battery metals company operating in Southeast Asia with licensed projects and with JORC resources for lithium. Our Rionket project comprises two key prospects, the Rionket prospect to the south, the JORC resource, and the Bangi Tum prospect to the north, with a good, healthy exploration target, and that's being drilled out at the moment, and that'll be moved up to a resource later this year. 3 is that we're moving past concentrate. We're not stopping at cathode lithium carbonate. We're moving into cathode active material. So what we want to do is use our lithium carbonate or hydroxide, JV with a knowledge partner with experience in producing CAMs, and get ourselves into the chemical part of the supply chain. And 4, management and board owns a big chunk of the company. So every time the share price goes down, we feel it. We feel offended. Right, so just to recap, two key projects in Southeast Asia, Real and Ket to the south, in southern Thailand, about 40 minutes out of Phuket. Slightly undulating, agricultural country, a lot of old tin mining happened there. In fact, it was the second largest tin producer in the world behind Perak in Malaysia. And then in Vietnam, our MOU for a standalone lithium conversion facility with Vin Energy Solutions. So on Vin Energy Solutions, the objective here is to build a lithium carbonate conversion facility. We'll start with third-party concentrate, and then we're looking at opportunities right now for our own spodumene supply, and that'll come in either to feed that plant later or for a second train. This project will be delivering a PFS in about 2 months. It's well progressed. When we announced this MOU, we actually sent RFQs out. We're in discussions with certain parties for an EPC contract. So basically they'll construct and deliver an operating plant. We expect our CapEx to be substantially lower up where we're operating. Vin ES is manufacturing batteries for hand tools, EVs, bikes and cars, their own cars, VinFast cars, which are being shipped to the US, and also for stationary storage. So it's a largest battery producer, not the largest, but it's growing, and it's got a serious presence in Southeast Asia. Then Real and Ket, this is our concentrate to CAM initiative. We're drilling out the 2 projects now. We'll deliver upgraded resource, PFS later this year, submit our mining license applications on both prospects. While that process is happening, then we'll complete our feasibility study. So we'll run them in parallel. The idea is to get to cash flow quickly. So with our MOU with VinES, I think we can get that to cash flow much more quickly than we can a mining operation. There's a lot less hurdles, projects located in a special economic zone, fully licensed and so on. But Real and Ket is very well progressed, and there's a lot of support in Thailand for the project because there's a lot of policy surrounding battery and car manufacture or electric car manufacture, and that policy is flowing straight down into mining to secure critical metals. So Thailand itself is a pretty interesting country. It's very focused on industrial policy. Many years ago, the minister said to me, if you want to produce a concentrate in Thailand and ship that out, may be interested. If you want to value add in Thailand, deliver into our industrial sector, we'll roll out the red carpet for you. And that's what the country's about. It wants to value add. And that's the benefit for us. We've got a project where we can value add in country and deliver into the ecosystem. Thailand is the largest auto manufacturer in Southeast Asia, the 4th largest in Asia. There's over 20 auto manufacturers there now. There's 18 battery projects underway, 14 battery electric vehicle projects underway. The Mercedes EQS EV, the flagship, is actually produced in Thailand. So if you see it on our roads here, made in Thailand. In fact, every dual cab ute in Australia, apart from the new Chinese one, came from Thailand. And a lot of the Japanese cars, like the Camry and so on, comes from Thailand. So it's a big manufacturing centre in ASEAN. The Real and Ket project has 2 prospects. To the south, we've got Real and Ket, 10.4 million tonnes at 0.44% Li2O. I'll touch on grade. Don't let that concern you, because it's not really what we're talking about when it comes to feed. We're looking for a resource upgrade there in a couple of weeks. And then to the north, Bangi Tum, drill supported exploration target of 8 to 14 million tonnes at 0.5 to 0.8% Li2O. Same style of mineralisation, richer. The projects are located on a dual carriage expressway with energy running by the project. So this top picture, that actually runs by the Real and Ket project. Not through it though, luckily. And then below we've got a 240 megawatt hydro dam on the grid, and there's ample space for solar too. So we can actually deliver a product with a very low carbon footprint. On grade, so here we see some ore sorting results. We took the 0.44, in this case it was 0.5% product. We put it through the ore sorter. 60% was waste, all below cut-off grade, increased the grade up to 0.92%. So that's a very good feed grade for what we're doing. Then we produced a 3% concentrate grade, which is normal for micas. And then we're doing, and that we got about 80% recoveries there. And then our lithium test work has produced recoveries up to 88%. And this will improve because all that test work is based on unsorted ore. Now, when we're talking about grades, people going, well, you know, spodumene's plus 1%, 1.3% or so. How's that going to work? In 2021, lithium carbonate produced from lepidolite made up 18% of global lithium carbonate production. And you can see on this chart here, produced by Wood Mackenzie, that the lepidolite projects, the big ones, are at the bottom of the cost curve. And how is that so? It's because they're operating in a low-cost environment. The projects are located near all their reagents, and they're located in their markets. And they're cheap costs, low-cost environment, hence that slide at the start of the presentation. This company here, its actual cost to produce lithium carbonate at C1 cost of below $6,000 a tonne. So it's incredibly competitive. So grade's not everything. And then in China, these projects or processes are all using a sulfate roast. That's what we're going to use. Well understood and tested technology and so on. And above here, you can see what we've got. Resource grade of 0.44%, ore sorting 0.92%. We think our target feed grade will be somewhere between 0.75 and 0.92%. And then we're going through to lithium carbonate with really good recoveries. Just a cross-section at Real Kiet, 102 diamond holes drilled. That'll get us through to our resource upgrade. So it's 10.4 million tonnes at the moment. And in this cross-section, you can see some nice meaty intersections, composite intersections up to 70 metres with grades averaging sort of 0.6 to 0.7% and a lot of individual pegmatite grades plus 1%. So the ore sorting works because it's all those clear gaps between the pegmatites that we sort out. And at Bangi-Toom, 3 times the size, basically, our exploration target of 8 to 14 million tonnes is based on 1/3 of our target area, but we've still got nice, massive pegmatite dike swarms there. Late last year, we did some exploration there, a lot of rock chips and channels. Of 64 rock chips, 44 average 1.56% Li2, right up to 2.62% Li2O. So our exploration target of 8 to 14 million tonnes there is based on 1/3 of our target area. We're about to produce a updated exploration target, and then we'll take that through to a mineral resource estimate later. Katatong, about 30 k's to the north. I don't know what that bell means actually, but about 30 k's to the north. That's under application for prospects, lepidolite 2. This will be a feeder project into Real Kiet. ESG is important. You want to bring your communities on side. We've got a pretty big ESG program in place. Our view is that you can't operate as an island. You've got to be embedded in your community and bring them along with you. Our view is if your community thrives, you'll thrive. So the idea is it's symbiotic. We're doing a lot of work with schools. We focus on schools, health and education, sport. We deal in infrastructure, tall ablution blocks and playgrounds, all the way through to school materials, whatever helps to get a school going. And we do a lot of health work there. So we've got x-rays here. We did a big community x-ray program. So 4 points to finish on, 3 in this slide. Only licensed lithium explorer in Southeast Asia with progressing projects. Foundation project, Real Kiet project has 2 key prospects. Not seeing that. And our strategy is to build our critical supply chain. So we're moving from concentrate through to carbonate through to CAM. And finally, management has about 45% of the company. Explore a better future with us. Thank you.
Thanks, Paul. Good try. Get off my stage. Well done. Go and take your comic book. Have a look at that for more information. Go and speak to the man. One last one before morning tea. And remember, we will lock the door now because we said that only the people in the room listening to the entire presentation are going to have the opportunity to win the prize. What do you want?
Oh,
Are you giving him back that? That would be handy, Paul.
yeah,
Fabulous. This is Paul Locke, everyone. Remember, he the organised one from Auntie Pam, if you want to know more about them. Right, we're going to go to South Australia now. And a metal we haven't heard a lot about at this conference. Silver, Investigator Resources exploration focus is located approximately 70 k's north of the rural township of Kimber on South Australia's Eyre Peninsula. They've actually expanded their target, from what I read recently, on the back of some impressive assay results. Is that correct, back in May?
Absolutely, and we've always got a few more coming at some stage too, Chrissy. So.
Fantastic. Well, this man's going to tell us all about it. He's got years and years of experience. It's going to go for almost 4 decades. Am I allowed to say that?
Yeah, thanks.
Yeah, well, the more the better. The people at Wilson's told us the more experience, the better. And you're a mining engineer, you've also got operational, you've got finance, you've got everything, and you're working hard to make this one work. And we're interested to hear about silver because it's not one of the minerals that we've heard a lot about yet, young Jack. Okay, so would you please make him very welcome? We've got Andrew McIlwain, Managing Director and CEO of Investigator Resources.
Chrissy, well, thank you very much. And yeah, you can squeeze a fair bit into 40 years of experience. So thanks for that. And thanks very much to the team at Vertical Events and RIU for providing me with the opportunity to talk about.
Would you like this? I'm just saying, because you are so fabulously advantaged with height, take that with that hand and put it right there.
Okay, I'll end up talking to this and changing the slides with that, but thanks very much. No problem. Look, and thanks for the opportunity, and thank you very much for coming along to hear about the silver story. Quite unique. We're unique in Australia in that we're the only primary silver project in Australia. Others have got certainly silver credits in their base metals operations, but ours is a primary silver project. We do have some lead. We haven't ever talked about it much in the past, but we're bringing that to the fore. But if you're thinking about investing in silver, you need to be invested in Investigator, and I explain why, and I'll show you a graph in a minute. A quick snapshot, predominantly in South Australia, we've got a couple of other tenements. I'll talk about one, diversification in Northern Territory. Big focus in South Australia, 8,500 square kilometres. Over the last few years, we've been one of the major explorers in South Australia, and credit to previous MD, John Anderson. The discovery of the Paris Silver Project was in 2011. By far the highest grade silver project in Australia, located about 7 hours drive from Adelaide, near the township of Kimber, but importantly, we're up in the bush and no sort of arable country. And I'll show you a photo of that later. 53 million ounces of silver in our resource. Today's price off a little bit, but that's about $2 billion worth of in-ground value. And a lot of the challenge I have in trying to present the silver story is how does this look like a gold project? And on a sort of gold-silver ratio, which is travelling at about 80 at the moment, this is a 700,000 ounce gold lookalike project, which if it was outside Kalgoorlie would have been mined a few years ago. So 53 million ounces, 100,000 tonnes of lead in the resource, very important, I'll talk why. We've just gone through a project of infill and extensional drilling. We'll have a new resource out soon. That underpins our DFS, which we anticipate having completed, or completing that early 2024. About 80 kilometres, then I need to go back. About 80 kilometres to the east, we have a bank of tenements called Morgans, quite similar to the Paris setting, nowhere near as advanced, but we've had some exploration success and we'll be focusing back there at the second half of the year. Good Scottish background. I don't like spending our money, so happy to have other people spending money here on a farm out in the Fowler Domain, also here with Gold Road in the Stuart Shelf. We also have some other tenements here near Broken Hill, and we've only just been able to get on the ground, having taken a long time to negotiate native title access, and a little bit of a diversification into tungsten. I'll explain the logic behind that. What do you need to know about Investigator? The simple thing is, if you want to invest in silver, you should be invested in Investigator. You see this graph, we move absolutely in lockstep with the silver price. And you heard it today, it's probably a good time to buy our shares today. Silver off overnight, we'll be off this morning. And as soon as the silver price recovers, we will recover. A month ago when I presented at the RAU conference in Sydney, silver was $39 an ounce, we were 6 cents share. Today it's 34, we're a 5 cent share. So we move in lockstep. Market cap around about $70 million. And our main shareholder is a precious metals fund out of the UK, Jupiter Asset Management. They have about 15% of us, and I regularly ask them about their silver price prediction. They love it. They go back to structural changes in 1946 and what's happened over that period of time. And I sort of described their view of the silver price as almost being pornographic. They think at some stage it's going to have 3 digits, but they said happy for you to talk about it being $70 US in our vision. So they are right in behind us. We've got a well-credentialed board, a couple of South Australians in there, and well known to the regulators and the authorities in South Australia, which is quite important. Just step aside, a couple of things about silver, because everyone knows about gold. Gold is a precious metal, store of wealth, but little industrial use. By comparison, silver has a significant industrial use that's actually starting to grow, and it's growing exponentially as we see the evolution or the decarbonisation and electrification, because every solar panel that gets installed has about an ounce of silver in it. Not known to many people is that solar panels don't get recycled well. They're certainly not economic to recycle, so that gets consumed and off to landfill at the end of their useful life. Every electric vehicle's got a couple of ounces of silver in it. And what we've seen happen is now that the demand for silver is starting to outstrip the production. Production annually around the world is about 900 million ounces. Demand last year was 1.2 billion. So that gap's increasing, and you'd expect that the price is going to reflect that. So whilst silver and gold move a little bit together, there's going to start to be a bit of a departure as the demand for silver continues to increase. Our Paris Silver project, the flagship project, and really underpins the value of the company. We completed a pre-feasibility study on that at the end of 2021. Quite robust metrics at that time. Our base case was $34 an ounce silver. I always talk about Australian dollars because everything we will do will be in Aussie dollars. But base case 34, upside case 38. A couple of weeks ago it was 39. As I said today, it's at 34. So we're sitting at base case. Importantly, a really high margin project. So at $34 an ounce, we had nearly a 50% margin from our all-in sustaining cost. No doubt when we present our DFS, we will expect to see an increase in the CapEx, some modest change in OpEx, but also what we'll be doing in our DFS is bringing to the table the value of the 100,000 tonnes of lead that's in the project. So there's $200 million of lead in that resource. In this previous evaluation, we didn't take any revenue consideration from lead. So there's an opportunity that we're chasing down through the DFS study at the moment. Picture tells 1,000 words, and in my 40 years, I've developed projects in far more arduous conditions than this, and I sort of had a checklist of the things I want to be involved in. No communities, no downstream water users, no waterways, and so on. And this arid bit of parched land outside Kimber is that in spades. What we have here is a strike length of the project, about 1.1 kilometres north to south. It's about 800 metres wide at its widest, and I'll show you what the pit will look like over that. But you can also see here the 25-metre spaced lines where we've done the drilling, so quite a methodical drill-out process. There are very few impediments to development of this project. We're well regarded in the district. We're one of the major spenders. We are the major spender in the IGA supermarket in Kimber. Also, as I said, the impact to the community will be negligible. There's no arable farming land. We'll displace a few goats, and that's about it. This is what the pit will look like, a 4-stage pit starting up here at surface, the deepest about 120 metres deep here. And I mentioned an infill and extensional drill program. We had a small area just here at the end that we had acknowledged with the traditional owners that we'd keep away from. We negotiated access back to that. We just recently completed drilling this area out, and we expect to see the resource extend and certainly the pit push further south. Very simple. It's quite a friable ore, and we expect that about 70% of the material won't need drilling and blasting. It's simply a rip and dig sort of exercise, so lower mining costs. Pretty conventional. It's 3-stage crushing, grinding, cyanide leach as you would with gold. And one of the things we'll do, and it'll be the first in South Australia, is we'll have a dry stack tailings. So rather than just pumping tailings out onto a paddock, we'll dewater the tailings in the process plant and take that material out. Probably mix it with a waste dump, but importantly, we recover far more water. So in an arid environment where your water needs to be pumped in, needs to be conditioned, we'll actually recover about 70% more water than if we simply pump tailings out. So big tick for us. Although we'd like to think that we could use solar generation, sun doesn't shine 24 hours a day, so we'll have solar generation supplemented by diesel power and a camp on site for about 110 people. The work we're doing with the DFS, and this is just another quick look along the strike of the ore body, but importantly, this is the drilling we've just done recently over that, what previously was a restricted area. We'll have a new resource out in the next couple of weeks. The work we're doing behind the scenes is focused on how do we recover the lead out of this resource, and then we move forward to do obviously the mine planning and scheduling from that. Probably the worst money I've ever spent is drilling water bores and all the things we have to do behind the scenes. I get no news flow out of it, but we've been able to identify the process plant water source, which is about 10 kilometres to the east of this. But importantly, we've drilled monitoring and dewatering bores in the pit in preparation for pit mining. So all that work's completed, and as I said, charging down the path of producing the DFS in early 2024. We're also, as I said, well known in South Australia. We've engaged with the regulators. They're not surprised they'll see a mining lease application come next year, and we're working with them to make sure there's no gaps in that as we present that. A little bit of the steak knives here is, here's the Paris footprint, and ironically looks a little bit like a footprint. You can see the drilling that's been done around it historically. 4 or 5 kilometres away, we have an area here we call Apollo. We have areas in the middle. And you can see some numbers here. This was a previous drill program, the highest grade silver intersection we've had outside Paris. We went back, couldn't replicate that, but we certainly kept getting silver up here. It's a bit of an unusual beast, and we'll go back again and drill it again, but all's not lost by any means. But we certainly will chase up some of these other opportunities, and there's even some underneath this little inset as well. Further drilling on this patch of ground before the end of the year. Regional opportunities about 80 kilometres to the east, we have this series of tenements, and important, this Uno fault that runs right along here goes 80 kilometres to the west and is where Paris is. We hadn't been able to get on this ground, again, native title restrictions. We negotiated our path forward with that, and we drilled some holes there in 2022, 27 holes, of which was the first drilling there for a long time. 24 of those holes hit mineralisation, so it's a really spectacular strike rate. Again, we'll be back there, a little bit more base metals focused here, but certainly silver, and it would lend itself to being able to truck that to Paris. Said a little bit of a diversification, and when I presented this to the board, they asked me what I'd been smoking, why did I come up with getting involved in a project like this. And it's a pretty simple answer. I wear another hat. I'm the chairman of Emerson Resources, and we've operated in, Emerson's operated in the Northern Territory for about 15 years. And in my last 40 years, I had a couple of years in Spain running a tungsten project. So I know a bit about the tungsten industry. And one of the tricks in tungsten is your offtake agreement and how much they take away from you from the headline price. I always knew about Molly Hill because when I was in the tungsten business, and we in fact floated a company on the TSX, which is still surviving. But when I was in that business, we were looking for other opportunities, and this was always on our list. Reasonably high grade, interestingly, not only tungsten, but also has molybdenum. So we went to Thor, and it's not that we think there's any issues with Paris, but at Paris, our activity levels will drop off when we're going through the approval process. So something else to keep the team going. And we have a very, very capable exploration team. We thought we'd jump into this. We did a deal with Thor, who owned this project, to earn in. It's a really simple. We spent $1 million. We end up owning 25% of it. More stake knives. Whilst we get 25% of this tenement, they give us their 40% of the adjacent tenement, which has existing tungsten and copper resources on it. So should have explained, this is about 250 kilometres northeast of Alice Springs. Again, no landowner issues, no water issues, no downstream water users. As I said, tick my boxes. The beauty of this was the project did have a DFS that was reported to the market in 2018. The important thing is since then, the molybdenum price has skyrocketed. It was 15, went to 120, currently 6 at 60, and that'll get factored into our evaluation after we do our first round of drilling here. And we won't spend a lot of our own money. We've already got collaborative funding coming from the Northern Territory Government to do some work. And we will no doubt, if we need to move forward and develop this project, NAIF and NT and so on will come to the party as well. The story here is we'll have a new resource out by the end of this year after having drilled in August. Quick snapshot, you've heard it all before, but if you want to be invested in silver, Investigator is the place to be. Easy in, as I said, we're off a little bit today, but as soon as the silver price turns around, we'll be back. We've got the team that's done it before. Importantly, Jason, who's on the booth with me at the moment, has been with Paris since the start of the resource drill out, so he knows it well. We're well regarded in the South Australian industry and regulators. It's a tier 1 jurisdiction. there's a simple pathway to approvals for this project. And we've got a bit of news flow coming. I said, we'll update the resource. We've got milestones. Lead recovery is going to be a key thing in the DFS. And as soon as we land that, we'll get that out. And as I said, watch Molly Hill. Thank you very much.
Because I'm closer to these, and you can have that.
They've turned that one off.
Oh, we like, oh, there we go. Now we can be a duo act. Okay, so if you are in the room right now, take a seat.
Don't leave.
If you are in this room right now, you should take a seat. All right, now you haven't. That's all my instructions. If you cannot follow the instructions, I cannot help you with what is about to unfold. All right, and you don't have to put your hands in your head. You just need to take a seat. And this man here is going to tell you how you could potentially walk away with a little bit of what he's produced.
So look, thanks for putting up for the last 15 minutes. But the other unique thing is that you get something for nothing. So if you've sat through that, and if you actually have a look under your seat and you find my business card that looks a bit like this, come and collect that.
So put your right hand under your
It's here
seat,
somewhere.
left hand under your seat, and then go looking under other seats, because it may be under a seat that is not got a bottom in it.
And if you can do it safely, don't knock over your neighbour.
Can you find a business card underneath your seat somewhere? Allegedly blue tacked on by the staff at some point this morning. Oh, look, she's going mad
God.
down here. She's going
Fastest I've seen
crazy.
you move, Kerry.
Have you got?
Whoop.
Oh. Come on up here. Well, we all know this fella now. Jack, come on up.
A long time ago, somebody gave me an ounce of silver and they said, hang on to this young fella because it'll be worth a fair bit in the future. Now, that was worth $5. Last year, this was worth $400. Today, it's worth $600. So, Jet, congratulations. And he has got the... Well done.
Good on you, Jet. That's brilliant. If you're here at the start, I'm going to let you go because we have got a truncated morning tea break. So I know you can do two things at once. Well done, buddy. And we'll get your appraisal of the first session a little bit later on. 15-ish minutes, I'll ring the bell, come back in, bring your morning tea. That was great. Can you put your hands together, everyone, as well, please, for Investigator? As he said, investigate them if you're into